join me for episode 2 of When the Bell Rings. You know, I'm excited to share some things with you today that I know are going to help you become a better trader. That's the aim of all of this. So in my neighborhood, a lot of people employ these yard crews. Maybe you do the same thing, but you've at least seen what I'm talking about. This is a truck that rolls up. It's got a trailer behind it, and these guys pile out. They all have their assignment. One of them will mow, one of them will edge, one of them will clean up. And a job that it would take maybe 90 minutes for one person to do, these guys can knock out in 20 minutes or less. And as quickly as they show up, they are gone on to the next house. The only issue that they face is, of course, the weather, and specifically rain. So when those dark clouds roll in, when that lightning flashes, when the skies open up, there goes their day. And no longer can they continue to work and make their day's pay. They are now sidelined until the rain stops, until things dry out before they can return to work. So that rain that's so good for the lawns is equally bad for the lawn crews. And it might be a couple of hours or it might be several days depending on the type of front that has blown in before these guys can return to work and start making money again. In the meantime, though, they are at the mercy of the weather. So Jeff, you ask, why are we talking about yards and rain? I'm supposed to be hearing about trading. If you're going to help me with my trading, what's your point? Okay, here's my point. Do not be a yard crew type of trader. And by that, I mean, don't have one style of trading that's going to serve you and make you money. That can't be the only thing you do. As a trader, you've got to be equipped to trade a variety of time frames and styles based on the market conditions that come along so that you can keep maneuvering. That's why we're all trading, isn't it? Because we don't want our performance to mimic the overall market performance day in and day out. If we did, we could just pile into index-based mutual funds and get it over with and go do something else. So as traders, our job is to continue moving the money into the best opportunities. We've got to rotate out of those stagnant plays and out of those failing positions and into the best opportunities that we can find. So the market's going to reward different types of plays at different times. Last summer, for example, we entered into a period of extremely high volatility, and it became a day trader's market as we woke up to 3 and 4% market gaps. That's not a type of market you want to be holding overnight positions in. Since then, things have really settled down, and the market has really recovered, obviously all the way, and we're making multi-year highs recently, but it's become the type of market that's a little slower moving, a little less gappy, and therefore the type of market that can reward both day trading and swing trading. So if conditions come along which sideline you as a trader because you're that one style of trader, you're that yard crew trader, and you're sidelined, then you're no different than those yard crews on a rainy day because you're at the mercy of the market. You're waiting for it to come all the way back around and reward your style of trading. It might be days, it might be weeks, it might be months or years. But either way, you're stuck and you have nothing to do until then. So as a trader, you've got to get equipped to trade a variety of different time frames and different styles and types of trades so that you can keep moving, so that you can keep taking the right types of risk and keep letting an edge play out over time. This is a huge focal point of the courses that we offer, so that we're not only teaching traders to identify these changing conditions, but we're teaching them how to trade those momentum breakouts. We're teaching them how to finesse their entries on those pullbacks. We're teaching them how to recognize reversal plays. We're showing traders how to trade both the long side and the short side. We're teaching traders how to manage their positions and then furthermore how to operate on multiple time frames so they can position trade for multi-month moves in some of those longer term accounts. They can swing trade for multi-day moves, and then of course they can capture some of the intraday moves by way of day trades. But either way, they are able to continue putting money at risk, taking the right types of plays in order to stay able to shift with the tide, because the market is going to reward different types of plays at different times. And you don't want to get caught if it stops rewarding your favorite type of play, because then where are you going to be? And don't get me wrong, there's nothing wrong with having your favorite types of plays. What you've got to understand though is as a trader, those favorites at some point are not going to work. And you've got to have some other style to rotate into at that point. And so as a trader, you need to be equipped to trade different time frames, different styles and techniques. And so you've got to continue to learn, you've got to continue to grow and develop and get equipped as a trader so that when the bell rings, you are not that one-trick pony. You are the type of trader who can continue to maneuver and stick and move as the market requires. All right? Thank you for joining me for episode 2 of When the Bell Rings. I'm going to be back with you soon with more, but in the meantime, trade like a bandit.